Okay, we are live. Urgent trade alert. Rate cuts are confirmed. So Powell came out Friday and said he wants to support the labor market and that inflation is finally moving. So what's about to happen is monumental. There's $7 trillion in money markets. When we had the hyperinflation in the US, the Federal Reserve did something unprecedented, hiked rates up to 5.5%. And this made it so a bank account has 5.5% free money just to sit there. But what's about to happen is that's going to get squished probably back down to 2 or lower in the next year or two. So what we're looking at is a dot-com like bubble about to hit tech stocks and likely cryptocurrencies. So with the fiscal situation in the US, the government must run a massive deficit. I don't care if Trump or Kamala wins. This portfolio is hedged against Kamala with war, should be good for tech stocks and oil. And if Trump wins, your crypto positions are going to go to the moon. I believe with the current polling that they're off due to RFK switching sides because huge amount of independents are going to swing in the swing states. So we'll see how this plays out. We're hedged against both outcomes. Once we know for sure who wins, we'll make the switch. But basically, Kamala, you want to be long oil, which is counterintuitive with the whole green plan. And then war, obviously, with Trump, the opposite. So let's jump into the positions right now. Buy these 7 stocks now. Again, we're about to see $7 trillion of capital flood into markets. It's going to get swished out of money markets. And this cycle, quite likely, is going to be a lot longer than people expect. That's because we're going to have hot inflation for a long time that's sticky, and the government's trapped. No matter who wins, they have to run a massive deficit. So the money printing is not going to stop, and global liquidity is going to skyrocket here. I think these positions can double you up by Christmas. Let's jump right into it. Right now, we're up 757% in 4 years, outperforming the S&P 500 by 1,338%. This hedged portfolio protects against war, rate cuts, Trump or Kamala winning. Okay, here's our high-risk portfolio allocation. This is the one that you probably want to put the bulk of your capital in. We've had a pretty boring year, and I think this one's really set to outperform in the short term. If you're a member or call Dean for a free trial, you're going to gain access to our membership area. We were in this business since 2008, and at first we just managed other gurus' products, and they'd report all these great returns, and we'd send out our staff to recruit testimonials, and lo and behold, no one had the same results as everyone else. So eventually we fired them all, created our own products, and we made it so everyone is forced to get the same return. And the way that works is when you test drive this, and Dean will do this for you over the phone and send you a screenshot so you don't even have to figure out how to use it. Most of our clients are retired, hate computers, and want to be given everything on a silver plate. And that's what we're here for. We've purposely made the product super simple and slow. So we don't do a lot of trade alerts. It's not necessary to get great returns. But basically, you type in how much to invest, and this is going to automatically give you a ratio of shares to purchase. So everyone gets the same return every day because we all have the same ratio of shares. And we report this daily return via SMS and email every single day. As far as I know, it's the only product out there like that, and our members have done extremely well following the plan. We split it up into a defensive and offensive section. And so on the defensive side, currently, we have UVXY. We actually sold that in that little mini crash about a week ago. We'll buy that back at some point. I think the VIX is going to get crushed. There's good reason to believe the stock market's going to rally very hard, at least through December. And again, all the reasons we describe. We have a very strong economy. We have something like 10 million new immigrants who can work to support the labor force, get inflation down. And everything's really looking very good. And you got 7 trillion in capital coming through. So on the defensive side, we currently are only long U.S. Treasuries. That's your recession play / stock crash play. That's safe. If we thought there was a bond and stock market meltdown about to occur, we would be in cash and UVXY. And again, we just got out of the longest bear market in Treasury's history. I'm not expecting that position to outperform, but if they cut rates, it's almost certainly going to bring down interest rates, and that means your Treasury position on the long end is going to go up very, very strongly. So right now you can see we have no position in cash, no position in the VIX, and we have per unit 25 shares of TMF. Now, right now that asset allocation is at 16.68%. That'll go up and down every day. We're not targeting asset allocation percentage, ratio of shares. On the offensive side, we have Coin. I look at Coin as a Warren Buffett style play in the cryptocurrency space. There's other opportunities out there. You could be long MicroStrategy. You could be long the MicroStrategy leverage times 2. You could be long Bitcoin miners. All of those don't have a moat around the castle. So sometimes they outperform, sometimes they dramatically underperform. Sometimes hedge funds are attacking those. Coinbase literally has a complete monopoly. It's quite likely going to get all these SEC cases gone if Trump wins. And I think this one's going to skyrocket for a double or triple from here. And again, they are the custodian of the ETFs. They have no competition. And basically the safest play in this space I can see outside of just being long Bitcoin. We've got a heavy position in that. On the oil, okay, so right now for every 8,560 bucks you got in there, you're going to buy 16 shares. Now, if you buy, let's say 10,000 bucks, it's not a full unit. This calculator will automatically give you the right ratio. So this is a really cool product and makes it very easy for you to follow. ERX are large oil and gas companies. It's very counterintuitive. Trump wins, you want to dump that. Kamala wins, you want to buy it because quite likely the floodgates will open up to create more oil with Trump. Price of oil goes down. Oil companies don't like that. You get Kamala in, she's going to restrict oil, continue the wars, and quite likely oil is going to start rising again. So that's our play right now. And again, just with rates going down, more money is going to flood into markets. Inflation expectations is going to go up. So ERX is a pretty safe bet right now, coming in at 15 shares. FNGU are the big tech stocks. If Kamala wins, we will go much heavier in that. Again, we know most of those companies are heavily embedded with the Democratic Party, and they hate crypto. So currently, my expectation is a Trump win, but we are quick to pivot on that. And again, the RFK switch is massive, and I don't believe that's showing up in the polls. And again, I don't quite really believe the polls. We can go into that in more detail, but it's going to be very influential in the swing states here. We'll keep a close eye on this. It's probably going to be a very close race. And again, we will pivot depending on that. We like a safer play in Bitcoin, highly undervalued. Bitcoin's likely going to 150,000 by next year, regardless of who wins. Trump wins, it could blow past that. And again, that's coming in at 42 shares with currently 16.95% of the portfolio. The last play Dean got us into, he's made a ton of money through his career trading. Semis hit an extreme low. We almost nailed the very bottom on that, I think by like 50 cents. And that's been the best performing play since we put it on. Could add to that too, really like that play. Had a little bit of a sell-off with NVIDIA. That's actually good for the market because right now NVIDIA has been hogging all the money and attention. So a little weakness in NVIDIA is going to help spread the wealth to a lot more assets, especially cryptocurrencies. So right now, that's the breakdown for the high-risk portfolio. If we get more confident in who's going to win or lose, we can adjust this. Once we do get the final election results, we can make some big tweaks. But I basically think you can sit on this and make quite a bit of money leading into November election and then be ready for a trailer before that. And again, if the polling gets strong one way or another with our analysis, we could probably front run that play. We've had some pretty good returns this year, had some pullbacks recently. So honestly, right now, you probably couldn't get a better entry. If you look at our track record, whenever you see a negative print, just look, you have massive gains typically right ahead. And again, we're very stubborn, slow, very few trades, and over time have been racking in the gains. Want to learn more? Get a free walkthrough? Call Dean now at 505-322-7515. Okay, this is our safe growth portfolio. It's really more interested in value. So we're looking at products that are primarily trading under value that we believe have good opportunity ahead. So pretty similar setup. Cost per unit is in 2,639. You can see we're a lot heavier in bonds. That's currently at 11 shares or 23.8%. No cash, no VIX. On the offense, very similar. Rather than being long coin, which again I think is highly undervalued moat, the trend is when the dollar drops, so we have a perfect setup for the dollar to drop. When the dollar drops against foreign currencies, you tend to have emerging markets skyrocket and outperform US stocks by a large multiple. It's usually short-lived, but go through history, you'll see it. It's happened several times, and you can get up to 10x the return the SPY on EEM. EDC is going to give you that play times 3, and it's a gigantic basket of stocks surrounding China. So again, we have that play at, and Michael Burry, who's interesting investor, is actually loading up on Chinese stocks right now. Just a side note, not following him, but I did notice that. So we've got 12 shares of EDC. That's EEM times 3. So you're getting 3 times your money in the position. It's heavier in oil. Again, it's almost guaranteed oil is going up as the Fed cuts rates. We have every central bank globally cutting rates currently. And again, I'll cut this if I think Trump's going to win and look for a dip to get back in. Oil is always a long-term play. Sometimes we play natural gas. We did really well with that when Russia attacked Ukraine. But again, right now, that's the safest obvious hedge against inflation returning currently. And again, ERX could potentially be thought of as a defensive play because if inflation does come back, you're going to get that double whammy. You're going to get bonds selling off with the general stock market, and the only thing going up is the US dollar and oil. So that's, even though it's on the offensive side, I look at that as a defensive play for the offensive side. Big position in Bitcoin. I just don't see any scenario when you got BlackRock, the mega conglomerate that really controls politics globally, making the most money on an ETF in its history. You better bet that the big players are going to push this higher. I've seen them basically just pushing Bitcoin up and down, up and down, up and down, while they collect as much as possible. And pretty soon, BlackRock will hold more Bitcoin than anyone else in the world. So big play there. I just don't see us losing money on that. Safe play, huge position at 40%. And it's got a smaller play on semis. We'll quite likely add to that in the near future with one share. This portfolio, minus 2022, where we were just playing it super safe due to basically the pandemic, has had solid returns since 2019, 25% year to date, 4% 2020, 25% gain in 2021. Had the only losing year in 2022, playing it safe. 2023, 14.68%. We're currently up 8.6% year to date. And I think that number should at least double. It could be very, very big with, again, Bitcoin and EDC, the emerging markets times 3. That's where I think you're going to see the big gains there. And obviously the semis. Once again, you can put some of your money into each portfolio during your trial. Call Dean. He will actually do it for you. Punch it in and send your screenshot. Call him now at 505-322-7515 to learn more. Okay, here's some charts. Here's our 30-year. You can see it's been sitting here sideways. Most likely, this is about to fall, which means the TMF position goes up, and this is going to be forced due to the Fed cutting rates. And
Janet Yellen is also manipulating the yield curve. Basically, they're selling short-term debt and buying back long-term debt to force that interest rate lower, which reprices stocks higher. And again, the goal is to have a booming economy and stock market into the election. 2-year sitting here sideways. Again, this is going to get crushed lower due to the same reasons. Here's your TMF position. You can see it's been trading sideways for the last year to date. And again, I'm expecting this to break to the upside and make everything else go up with it. Here's your emerging markets. Finally getting a bid. This poor Asian play has been a nightmare for several years. And finally, looks like we bottomed and are getting ready to rip higher. Here's your FNGU. This has companies like Tesla, NVIDIA, Apple, Microsoft, just to name several, leverage times 3. It's been one of the best performing ETFs of all time. And again, I'm expecting a .com like melt up, regardless of who wins, due to rate cuts and fiscal deficit essentially being required to keep the U.S. economy trucking along. Copper we look at for inflationary signs. No signs there. So as far as being worried about short-term inflation prints being hot, highly unlikely. Truflation showing inflation at 1.42% right now, compared to the government reporting 3%. Brent oil, again, no signs of immediate inflation risk there. Silver and gold we keep an eye on for other concerns, typically bond problems with major countries like the US. So we have seen both silver and gold doing well. Gold's actually an all-time high. Now, what's funny is Bitcoin tends to track gold with a delay. So another good reason to believe Bitcoin's about to rip higher. September is typically the weak month of the year, and October through December are when we've seen time after time, especially on election years and Bitcoin halving years, extreme melt-ups. Okay, here's the dollar against Chinese currency. This has been a sign of stress in the past when it devalues too much. No sign there currently. We all saw the carry trade with Japan blow up. That's been rectified. And again, rate cuts will really help the Japanese currency do well. So no signs to, there's basically no reason to think we're about to have a stock crash. Time to be long. Which assets do you like the best? Here's just the DXY index itself. And again, you can see it's been trending lower. And I believe it's about to break below this level. And again, that's when you're going to see your Bitcoin really skyrocket. Regional banks, another thing to worry about. We're not long regional banks, but they are carrying huge losses on their bond portfolios. Again, with rate cuts, this relieves that situation, and we don't believe that's a problem right now. Russell 2000 is a good way to look at breadth in the market. If you got a few stocks going up, but the rest of the market's tanking, that's usually a bad sign. Russell 2000's been bidding hard this year. So all signs are for a bull market ahead. Here's the recent play. Again, we got in at that bottom candle and have been having great gains since. This can go much higher. Now we're just looking at some general markets, S&P 500 flirting with a new high. And again, I believe this is going up dramatically, probably not as much as the NASDAQ. NASDAQ's not at its recent high, but quite likely getting ready to burst into new highs into December. UVXY, we were lucky, sold the very top of that. We'll let this get crushed before we buy back into it. ERX, the energy bull, hedging very well for us. We've done well hedging with energy-related products throughout our history. And again, at least through November, very smart play with rate cuts coming in and escalations in the Middle East, as well as escalations between Ukraine and Russia. Both of these disrupt energy supplies. Here's your Coinbase. Again, I see this heading towards $500 at a minimum. And with Trump winning, who knows how high it could go, because they can get all these SEC cases off their back. Gary Gensler's fired. We have a pro-crypto president. Well, we got the biggest banks in the world pushing Bitcoin into ETFs with the most successful ETFs in history. Here's your IBIT play. Again, they've been bouncing this up and down, accumulating for their big clients. Right now, it's mostly retail. We're seeing a few hedge funds dip their toes, a few corporations dip their toes, a few sovereign nations dip their toes. Pretty soon, everybody and their mom is going to have, from pension funds to sovereign governments to corporations, everyone's going to have Bitcoin on their balance sheet. BlackRock's ensuring this. And this is the first time you can really do it safely in your stock account rather than having to learn how the crypto works and risk getting hacked or stolen. Okay, very good. That is our presentation for today. We'll go ahead and open it up for questions and let Dean close this out for us. We've got some K1 questions. I'll look into that and update you guys next week. Someone asked why IBIT over FBTC. Yeah, I just like to go with the low fees and the biggest company in the world for a simple play. Before that, we were doing Grayscale Trust, but IBIT's a lot better for that. We got 28 live, very good. We're going to be really pushing Portfolio Builder hard. Expect to see a growing crowd every week. So join us every week for the update. Even if there's not a trailer, we'll tell you what's going on, what's important to focus on, expectations for the election, all that jazz, and what to expect for future trade alerts. Okay, very good. Do you have any closing comments, Dean? Oh, it looks like he did have to hop off. Okay, guys, so very good. We'll see you back next week, same place, same time. Thank you for coming on live today, and we'll see you back next week.